9th of June.
The break.
Is that the break?
Is that the break everyone's been waiting for? Is it enough?
I don't know. I don't think I don't think so. Hey guys, Krisha here. Please be cautious of any fake comments and emails you may receive from people pretending to be Mango Research. Sean and I will never, ever contact you for investment opportunities or anything of that sort. To get in touch with the real Mango team, make sure to join our official Discord chat using the link in the description below. Stay safe out there, and remember, do it Mango. And what's up, you guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin and Radix analysis video. I have Sean with me today. Sean, say hi.
Good morning, everyone. And oh my, Radix making the cut.
You know, we thought we wouldn't have much to talk about on Bitcoin's chart today. But it turns out, Sean, Bitcoin is also giving us much to talk about. We're seeing price move.
An interesting video today, guys.
Yes, sirree. So, guys, on today's agenda, of course, we'll be starting off with Bitcoin, and only then will we be getting on over to the altcoin of the day, which happens to be Radix. And yes, I too am pleasantly surprised. Now, of course, the second, Sean, was Cardano.
Of course, it's Cardano.
But you know what? They really showed up today, eh? The Cardano fanboys and fangirls. You guys missed it by a couple of votes. However, if you want us to cover any of the altcoins that you are looking at, take this opportunity to get down to the comments section and tell us which altcoin you want us to cover on tomorrow's video. Okay, the popular vote, of course, wins. If there is a draw for whatever reason, well, guess what? Krisha gets to spin the wheel.
Honestly, I really thought Cardano was going to win it yesterday. I was keeping track of the comments. And no, the Radix community really stepped up because Cardano got a lot of votes yesterday. I was surprised to see Radix making the cut. But, Krisha, I also do want to talk about this chart right over here. CPI report did come out yesterday, and surprising a lot of people. We did have a knee-jerk reaction, seems like, but I do want to mention a few things in regards to this that is, in my opinion, very important for the long-term outlook on the markets. But I think we should be starting. Do you want to start with Bitcoin? Do you want to
Let's talk about the 10-year yields first, and then we can jump on over to Bitcoin's chart.
So I don't spend too much time over here because this video is going to get far too lengthy. So the CPI report for the month of June did come out yesterday, and it surprised a lot of forecasters by printing a higher number than the previous month. A lot of people were expecting to have a lower number being printed because of base effects, yada yada yada. But well, we did have a higher CPI print, and I am still of the belief that base effects are still in play. I do want to see how the next few months do play out. Clearly, however, the markets did have a knee-jerk reaction, and we did see yields rise. And guys, when I'm seeing yields rising, it means essentially that the bond market is seeing a sell-off, right? Bond market goes down, yields are going to go up. But right over here, what we are showing all of you is the weekly chart. And keep in mind, okay, we've been following this chart now for months. We were watching this go up, not the best, but we were looking for this to break down, right? And we did see the breakdown, and ever since we saw the breakdown, we have been in a downtrend, and we are still in a downtrend. So as of right now, this is still a knee-jerk reaction until we reverse this trend. And this is really important, Krisha. Why is this important? Because right now the bond market is telling us something really important, and the bond market is saying that, hey, we are looking at a possible deflationary environment while the rest of the world is screaming inflation, right? Just think about it. Why are yields going down? Right? Why are yields going down? Why are yields in a downtrend if we are worried about inflation? Right?
Yeah.
People are buying bonds regardless. Like the bond market, right? If you're seeing yields in a downtrend, the bond market is currently in a rally. Now we may reverse, but we don't have that reversal just yet. And this is really confusing for a lot of people. Is how could you possibly have deflation with all of this money printing, blah blah blah? And there's a huge debate on inflation versus deflation, and I've been trying to wrap my mind around this for the past months too. And Krisha, you and I were talking about, or rather we were brainstorming just last week, And I pose this idea to you that we may be in a longer term deflationary environment, or rather a better way to put it is a systemic deflationary environment where the fabric of our society is inherently deflationary right now,
right.
And we'll have bouts of inflation due to monetary policy and fiscal policy, right? So I think that's what's going on. And again, I wasn't fully able to wrap my mind around it. And just coincidentally, 2 days ago, Dan Tapiero, and I really, really respect this guy and his views. In fact, I definitely recommend following him, guys. Dan Tapiero right over here says, world not expecting a deflationary shock. And this is one of my thoughts too that I've been posing to all of you at Mango, that what would surprise a lot of people is that we don't see inflation and we see the opposite. We see a deflationary environment, or rather deflationary shock. And he's like, the world is not expecting a deflationary shock. The chart suggests that it's coming next year. RBA preparing for negative interest rates, and RBA over here is referring to the Reserve Bank of Australia, guys. We do have a lot of Australian fans and a lot of Australian seedlings, actually. The seedling community is definitely dominated by Aussies. And anyways, he goes on to say, given the massive debt overhang, only negative interest rates can solve. This is where it's important, guys. Fiat debasement, confiscation, bullish for Bitcoin. And I do ask him a question right over here. I say, Dan, forgive the question. So you're suggesting that central banks would have their hand forced into fiat debasement, correct? This is essentially what happened in 1929, guys, during the Great Depression or before the Great Depression. Or I ask him, do you mean that we'll see fiat debasement while undergoing a deflationary shock? And this second part of the question over here aligned with the thesis I had while brainstorming with Krisha, that we are literally sitting in a systemic deflationary environment while we undergo bouts of inflation due to monetary and fiat policy. And he says the latter. So that's going to be very, very interesting for Bitcoin, guys, because if we are sitting in a deflationary environment where essentially the price of everything is going down, but we're seeing fiat debasement on the other hand, we are going to end up having a situation where fiat debasement leads to people wanting to, flee the fiat currency, right? People wanting to hedge against that debasement, people wanting to escape that debasement. And that's where Bitcoin and even gold for that matter get really, really interesting. So I'm really interested in following how all of this unfolds. And hey, if you guys are interested in more of this kind of content, or rather information, let me know, and I'm happy to cover this more often. But hey, Krisha, Bitcoin, let's go.
But no, it's good that so we touched base on the yields and stuff.
Yeah, it's been a while. It's been a while.
This guys, I know
it's really important.
Some of you may not be too interested, but all of this feeds into the price of Bitcoin ultimately. Okay, all of these markets are sort of intertwined in that sense. Now, as far as Bitcoin's price action goes, we are seeing a breakdown on the weekly time frame. In fact, the first sort of clue was given to us as soon as we sort of penetrated that green box territory. We also marked out a midpoint for you guys. Now, the last time we spoke about this, we said, you know what, Mango's going to be keeping a very, very keen eye out on the midpoint. As soon as we start seeing consecutive candle body closes underneath that, that is going to be our first tip off on more technical weakness building up on this chart. Now, Sean, if we get on over to the daily time frame over here,
yeah,
what do you know? We have 1, 2 daily candles. In fact, we lost the midpoint, right, a couple of days ago, only for yesterday's candle to test it, and that's when we got that rally. In fact, as soon as we published the video, that's when Bitcoin actually started rallying to go and give that midpoint a retest. Got the retest, sold off on it, and now look at what price has done. And this is these guys are their classic plays, right? You lose a critical region of support, price normally goes up to test it, only for the trend to then see continuation to the downside. Right, so we saw something very similar here. In fact, that midpoint, Sean, lined up with the Tenkin as well.
That's beautiful.
So there was it was a very beautiful play. There was a lot of confluence on that. But now, Sean, speaking of confluence, all right, now I'm currently on the 4-hour time frame, guys. Look at what price has done. Now, Sean and I have been talking to you guys about this beautiful, beautiful falling wedge, right, that we have seen playing out right now since 29th of June.
The break?
Is that the break?
Is that the break everyone's been waiting for? Is it enough?
I don't don't know. I don't think. I don't think so. I think what I'm going to be waiting for here, I'll be honest with you, okay, is I want to see consecutive candle body closes underneath that diagonal, okay, because not only will we be breaking the diagonal, Sean, we're also breaking that beautiful horizontal, right? That support then that is now turned into resistance.
But hey, keep in mind that is a monthly level, and we're looking at a 4-hour break of that level. So I'd be a little bit more prudent.
Okay, yeah. I mean, of course, the thing is that, guys, we're drawing out these levels so that you may also get points of reference. Now, for example, okay, now this is one example that I'm giving you. You see this trade here, if price rallies up to this region right here, we've lost support, we've come back up to test that region of support that we've lost, right? That is a very, very neat trade opportunity.
Yeah, it's tradable, okay? Definitely. I see what you're saying.
It's very tradable suddenly, because we have been using this as support in the past as well. Now, think of me taking a short there, Sean.
Yeah.
Okay? I know that I'm wrong very, very quickly, because as soon as the next 4-hour candle closes over that region, I know that I have been negated on my trade.
Yep. And that is the essence of a easy trade, knowing when you're wrong easily, right? A good example of what Krisha is referring to, guys, is right over here on this midpoint range between the green box that we marked out just yesterday, right? Or rather 2 days ago, I believe it was, where we marked out this level, we broke down, right? And then we came up to test it over a series of 4-hour candles, rejected each time, and then made our way to the bottom of the channel of this range over here. Now we're seeing that level break towards the downside. The big question now is, do we see continuation immediately? Do we see a retest over here? What are your thoughts, Krisha? Okay, let's go with if this and that. If we see the next 4-hour candle also close underneath this green zone over here, as well as our falling diagonal line over here, which we have to take with a grain of salt, because remember, guys, diagonal lines can be very, very subjective, right? You may be able to adjust it like this, you may adjust it like this, right? People are going to be very emotional with their diagonal lines, so we're going to use the horizontal here to judge. If we close underneath that convincingly with the next 4-hour candle too, where would your next level be?
To the downside, you mean?
Downside, yes.
Oh, okay. This is where things get so interesting. All right. I'm really excited for this trade. So what happens then? Okay, now if we actually do see a rejection, price actually sees another flush to the downside, I'll be looking for this region to be tested. Okay, I'm looking for these candle body closes as well as these wick lows. Now this comes in, guys, at around $30,000. Now this is another level that we have been harping on about for days on end, right? 30,000 is going to be the next key region that we test. But Sean, let's not forget, us breaking this is breaking a pattern to the downside. We're seeing a continuation of a prevailing downtrend. This is where you see, when there's a trend that's being established, sometimes, guys, you are going to see that trend continue. It is not necessary that this so-called bullish pattern breaks to the upside, right?
There's only a probability of it breaking towards the upside, and that too is based on the idea that the trend, the downtrend, is reversing. So it's a break of a trend that's making it bullish, and not really the pattern itself. It's the break of the pattern that actually leads to the bullish move. However, if it breaks towards the downside, all you have is trend continuation. Now, guys, I do want to highlight to all of you how Krisha is not looking for that big move all the way down to 25,000. Not yet. She's looking for the range play from essentially somewhere around here at around 30,000 to 30,000. She's looking for a small move over here. She's not getting too deep into the trade just yet. She's not getting too excited. She's playing the ranges. She's doing exactly what we've been saying over the past few weeks. Play the ranges until we get that confirmation for the big break. Why? Because even though we are losing this level, this green box right over here, which is being derived from monthly levels, we are doing it on a 4-hour time frame. We're not doing it on the weekly, right? We're not even doing it on the 4-day time frame, which we'll be talking about very soon. We're doing it on the 4-hour, which has a tradable move to where Krisha has marked down to around 30,500. Now, Krisha, if we do lose that, then we can start looking for further continuation. But for now, I really, really like your trade setup, essentially from the top of this green box over here to the bottom. And this actually lines up, Krisha, with a trade idea that we've been talking about at Mango over the past few years now, right? Essentially, you could use this for a rising channel as well as a falling channel. And this is where things get really interesting, guys, especially under the context of what Bitcoin is currently doing. Let's say you have a rising channel like this going on over to higher time frame resistance, right? Now, people are going to be looking at this rising channel as a very, very bearish pattern, and they're going to be expecting it to break towards the downside. But what you will see often, all right, especially in the crypto space, is where this rising channel actually breaks towards the upside, right? Tests the higher time frame resistance, right, and then breaks aggressively towards the downside. So right over here, everyone gets front run, or rather they get stopped out of their trade, right, because they are over positioned and they try to front run the trade themselves, and then eventually the trade does go in the right direction, but they were too early on the trade, which is why I often say that you need to get all three right, guys. You need to get your execution right, you need to get your timing right, as well as your direction right. Being right only on the direction is useless without the timing and the execution, right? In fact, if you get even timing and direction right, execution could screw up your trade. Now, that was for your rising channel. Let's talk about the falling channel equivalent. Let's say you have a falling channel like this going on over to higher time frame support, right? Now, people are going to be looking at the falling channel and saying, hey, this is extremely bullish. We have a falling channel. It's going to break towards the upside. But what could happen, right, and often does happen in crypto, is the channel breaks towards the downside, Krisha, right? Tests the support on the higher time frame, where the higher time frame support steps in. Now, this is where it gets really, really interesting, because all the traders who are looking for the break of the falling channel get shook out of their trade, and all the traders now who are trying to trade the break of the falling channel towards the downside are also wrong on their trade, because the higher time frame support steps in, right, and then we U-bottom back up into the pattern and break aggressively towards the upside. So over here, we U-bottomed back into the pattern and broke down. And over here, we U-bottom back into the pattern and breaks towards the upside. And typically over here, Krisha, you see a move back on over to the top of the... It's a pretty aggressive move, but at the very least, you'll see a move back to the top of the channel over here at around 36,000, maybe even 38,000.
And this is actually a really good, it's a very classic Bitcoin thing to do, honestly, guys. Like, if you just go ahead and backtest some Bitcoin's historic price action, you'll notice that this is such a classic play. And it always, like, people always get stuck on the wrong side of this one. However, to tie this back now, Sean, and it's really cool that you brought this up, because we might be seeing, you know, a similar setup, all right, happening on the 4-day time frame. Now, we can see that this lower time frame pattern, this is a falling wedge into support. But what support, right? Fine, we have the monthly right here, but we also have the 4-day. Sean, this is something that we brought up with them, you know, a couple of days ago. If I just go ahead, clear out all the joins,
I see where you're going with
switch
this.
on that Ichimoku cloud.
This
has been, by the way, the most neatest range on one of the higher time frames. Okay, this is the 4-day time frame. We can see that ever since price broke into the cloud, we have been respecting the boundaries of that cloud. We came down, hit support. Yes, we wicked past cloud support, but only to close back in. Right? We did that on 1, 2, 3 candles now. Yep. We've done the same thing. Close back in. We head back up to the top of the cloud. Once again, met with rejection. Got back down to the bottom of the cloud, edge to edge on the cloud, wick down only to close back in once again. So we can see that falling wedge playing right into 4-day support. Now, the thing is that, Sean, we still have about a day and 19 hours left on this candle. Yep. Right? While we're seeing that 4-hour pattern break down, the play that you just posed could, well, play out, right? Wherein we see price wick down, maybe perhaps to that 30K region that I'm gunning for, only for price to get picked back up and close within the pattern, hence closing within the 4-day cloud as well.
There are enough 4-hour candles left within the next 4-day candle close to see that pattern. So we could so Krisha, this is where it gets actually ultra interesting. Now, going back on over to the 4-hour, if I may for a quick bit, we could see your play out, where we actually go all the way down to this range over here, essentially meeting the bottom of your support targets, right? See that play out, and still you bottom back into the pattern over here and see the break towards the upside.
Exactly.
So be very careful, guys, looking for the big break towards the downside, and on the similar side, be very careful looking for the big break towards the upside, because we have higher time frame resistance and we have higher time frame support. Do not play the lower time frames for the big trend trade. Play the ranges on the lower time frame, and Krisha highlighted something really important over here. We have higher time frame support on the 4-day, on the monthly, and hey, potential edge-to-edge trade, Krisha, to the 4-day 21 EMA lining up with a potential target of that falling channel. So falling channel on the 4-hour time frame, on the 12-hour time frame, leading to a test of the 4-day 21 EMA. That would be the first test of the 4-day 21 EMA that we've seen ever since we lost it right over here on this distribution. Very interesting times to come.
Yeah, so but now let's talk about two very important things. We're still seeing this overarching downtrend that we're seeing currently on the 4-day time frame, on the weekly time frame, actually play out on the 4-hour time frame as well, right? There's cascading effects. Now that we've given them the possible play wherein this could be a fake out, there is also a possible play wherein this could see continuation to the downside.
Yes.
So let's talk about that and also tie it in with our targets. Okay, so what I'll be looking for, getting back on over to the 4-hour time frame, let's get rid of all of Sean's scribbles, because I'm going to need those lines once again. Sean isn't the scribbler at home. He's just scribbling.
Hey, gotta explain things
over the place. Okay, there we go.
Seems like it's holding so far.
So what I'll be looking for here. Okay, now of course there's a plausible play where this could be a fake out only for the bulls to take this back up, but there's also plausible play of this breaking down. At what point do we know that this is official, this is breaking down, right? It is, I'll be honest with you, I'm looking at the 30K bottom of the range. Guys, as soon as I start seeing candle body closes, even a daily candle underneath 30K, I'm saying that the bears have taken over.
Yep.
Okay, confirmation, a double candle close is better confirmation, hell. At which point I will only be gunning then for the monthly 21 EMA,
Indeed.
which comes in at around 26K.
Yep.
Right? So let's just quickly get on over to the monthly just to get a good sort of visual on that. And there you go. Yeah, that's coming in at around 26,500-ish, give or take. Okay, so my first region, my first target is going to be 30K. It's only once we start breaking 30K to the downside, only then will I be looking for 26K lining up with monthly 21 EMA.
Yep.
Right? Sean, do you have any other downside targets for them?
No, I think you nailed it right over there. Monthly 21 EMA. I do want to highlight that for people really quickly. It's a really easy play in my opinion. Over there, Krisha, I will be looking for Bitcoin to put in the biggest if this then that. If Bitcoin needs to be putting in a higher low, it needs to be on this retest of this monthly 21 EMA the way I am trading it at the very least, right? So I will be gunning for that monthly 21 EMA right over here to be putting in that monthly higher low. All right, we could wick down underneath, okay, that's completely fine, but we need to close above that monthly 21 EMA, looking for that high low to be set in, and then in the long-term continuation towards the upside. However, that's of course my bullish bias on Bitcoin, my long-term bullish bias on Bitcoin speaking itself. If we close underneath that monthly 21 EMA, I will be quick to flip to a long-term bearish situation. Of course, I've done it over here in the past. I'll do it again. I'm shameless that way. I'm a trend trader. I keep it simple. I keep it mango underneath the monthly 21 EMA, guys. Bearish above the monthly 21 EMA. Bullish. That's how mango you guys can all be.
Cool beans, and I am in agreement with that. Now, these are the downside targets. Okay, let's talk about upside targets very quickly. I don't think much really changes there. Once again, Sean scribbles. So upside targets, guys. Now, what I'll be looking for, honestly, is for us to get back into that green box territory. It's only once we start living back inside that green box territory will I be looking for price to get back up to the midpoint. Now, this is something that we had drawn out for you, right? I believe yesterday and the day before. As soon as we start getting past the midpoint, then I'm looking at the top of the box coming in at $34,000. Okay, but right now, I mean, I know it's kind of sort of, it's moot to be talking about upside targets when the trend is so bloody bearish, eh? But these are, I think it's going to be just prudent to have all the targets in your face. That way you have points of reference if price does break to the upside. But once again, guys, if there's any updates, we will be putting out some shorts.
Yes.
Yeah, so if there's any good, solid updates to be had, we will be putting out shorts for you guys. Now, Sean, this is honestly all I have in terms of targets. I think it's only once we start getting back up over the falling channel.
That we can start looking for bigger upside moves. Until then, we need to at least reclaim the green box.
Exactly.
Right.
So now this is what we have for Bitcoin. Are you ready to move on over to Radix?
Let's do it.
Cool beans. Now remember, guys, if you want us to cover any of the altcoins that you are looking at, take this time to get down to the comment section and tell us which altcoin you want us to cover in tomorrow's video. Of course, the popular vote wins. If there's a draw, we will spin the wheel. Now, let's get in.
Let's do it.
Jump in. Oh yeah, and hit the likes if you're liking what Mango is doing so far. Hit those likes. EXRD USD.
Yeah.
There's Bitfinex and it's on KuCoin.
We should do Bitfinex.
Okay, cool beans.
Ooh, weekly, please.
Okay, so this is a brand new coin, guys. Radix is a relatively new coin. It hit the charts on November 2020, so super new. Okay, honestly, right off the bat, it's neat on the weekly time frame, right?
Relatively.
Let's start off with
especially for a brand new coin. It's just structurally, it's pretty good.
Okay, let's draw out some horizontals first. Okay, we start off with. We're at resistance right now, coming in at around 12 to 13 cents. Where's the next region of support? Yeah, I think this could be a region of support right around here, coming in at around 11 cents.
So this is what I'm seeing right over here. So historically, this chart has actually performed in a very methodical manner. Notice these high lows over here. If you mark them out and then mark them with horizontals, you're going to notice that they've been relatively well respected, right? We can go ahead and mark out that one. We can mark out this one right over here. Right, and then we can also go ahead and mark out this level right over here, right? And you can essentially mark out your range. If you want to be a little bit more conservative, you could go ahead and mark out the highs over here. And now, Krisha, we have a very neat range going on over here with our top of the range, our middle of the range, and we have our bottom of the range right over here. You could even go ahead and mark out this support zone that you had initially marked out as well, and then we could go ahead and draw this out as a box, and now we have a very tradable range based off this trend that we put in at the beginning of this asset's well, move towards the upside, right?
Yeah, I'm noticing another region. Apologies, I hit the mic there. I'm noticing another region of resistance overhead, which comes in here. And you're right in that this is a very neat chart in terms of the ranges, right? So, but let me say this, okay? We are up against resistance right now.
Yep.
This Radix is currently, it's sort of sandwiched in a very narrow zone there. Okay, we're up against resistance. I honestly, Sean, I won't be taking a trade here at all.
No,
okay, I'll be looking for, at the very least, I want to see resistance at around 12 cents being taken out for me to actually play this to the upside. And if I play this to the upside, I'll be playing it to maybe perhaps 15 cents. Okay, that is going to be a good 16% to the upside. So yes, there is going to be some volatility on this chart. Of course, there is the downside play as well, wherein price could also break the support coming in at 11 cents. And if it does that, then the next target, honestly, that's only going to be at 9 cents, which is a good 22% to the downside. That is not a trade that you want to be caught on the wrong side of, right? And there's another thing. I know that, Sean, you know, I understand that you find the ranges extremely neat, and I do believe that this chart is neat in terms of the ranges. Very neat, in fact. You don't see this too often. But a thing about new coins, now if you guys plan on trading this one, I'll say this: be careful of the liquidity on the charts. While the ranges are great, sometimes with the new coins there may not be enough liquidity, and the liquidity can be, you know, just sort of pulled out from underneath you very fast.
That's a really good point.
So if you're playing it, okay, play it, but make sure you have, you know, approach it with prudence. Okay, approach it with prudence. Have those stops, if anything, and yeah, just have your invalidation points in place. I'll say that because I've been caught on really on the shit end of the stick, honestly, when it comes to these low liquidity coins when I first started trading back in 2017, and those really just didn't pan out too well. So be very careful on the liquidity on some of these new coins, because while the chart may look good, you also want to make sure there's enough liquidity on the chart.
Yep, that's a really, really good point that you made right over there, Krisha. So those of you who are on the seed program, right, you guys know how when we are trading an asset like this, that's relatively new, that is relatively volatile, in our risk management strategy, we take all of these things into consideration. In fact, the indicator that is provided to you guys along with the Mango risk management sheet, all of that, when used together in conjunction, will protect you from that damage that a lot of new traders fall victim to, right, when they are trading a volatile asset only because they are keeping the upside in mind and completely neglecting the downside. So Krisha just pointed out how the downside move over here when we lose the green box territory is actually a 20% move. The upside move is only a 15 or 13% move. And honestly, Krisha, I wouldn't even want to be a buyer of this asset if we take out the green box territory. I think I'd be only interested above this horizontal that you marked out over here. That's a very, very key area that you marked out. I think if we go ahead and remove all the drawings, mark out just that region over here, and then we go ahead and mark out the trend line as well, right, you're going to see that that was the breakdown point of the trend, right? So this chart again indicating how neat it has been even on its resistance levels. So we broke the trend towards the downside, and this was essentially your retest and your opportunity to get out of this asset if you were playing the trend, right? So if you're playing the trend, that pump towards the trend line was the opportunity to exit. Now, of course, you didn't need to exit over there, in my opinion. If you're risk managing well enough and being prudent, this opportunity where we pumped up towards the upside, that was good enough to get out of the trend, and we did pretty well, right? You didn't need to get this move over here to get your profits. Take your profits and be happy. And then we had the move towards the downside, tested it over and over again, and by it I mean the breakdown point right over here. Look at that horizontal, Krisha, coming in at around 15 cents. Each time we've come up against it, we've rejected. So that's a key level towards the upside. I would not be interested at all until we take out this level, because that's going to be a very, very key resistance level. Towards the downside, I'm now noticing how important this support zone is, Krisha. If you notice, each time we've come down, so we set in the first high or low on this weekly trend, correct? We tested it once, showed how important it was by defending it, right? The bull showed how important it was. And then on the second retest, look at that conviction. Look at how this was a strong candle. It's like very strong. This lower high, because guys, this is still a lower high on a weekly trend, was pretty high, right? It came up almost to the previous lower high. And was this event driven?
That was a crazy range. What was that range? 40%? Because we're doing a 20% to the upside and 20% to the downside. That was a 40% candle.
Yeah, that's really
that was an insane.
That's a 70%.
Okay, never mind.
That kind of volatility is you got to trade your position size accordingly, guys. Be very, very, very careful on, like Krisha mentioned, be very careful on these kind of assets and do not get caught on the wrong side. If we lose the bottom of the range, Krisha, I think that's really bad. That's going to be the big warning signal for me, and I'll be looking at the very least towards 6 cents, perhaps down to these wicks here. So this level over here, guys, that's the very, very least you should be managing your risk off, and I don't think it should get to that level, because, or rather, your trade should not be in the red on that level if you're entering around here, because
it's going to be a flush, and even if it breaks, it's going to be a complete flush. All right, Sean, so I think we should start giving them some upside targets. We've spoken about downside targets. Let's tell them about some upside targets. What I really like is the horizontal that you mentioned right here, coming in at 15 cents. And yes, I do believe that is going to be a critical, maybe the most critical zone of, well, resistance overhead. We take that out, we actually might be activating a pattern play. Okay, I'm looking at a potential cup and handle like pattern playing out something like this. If this breaks out, let's just quickly go ahead, put in the measured move. I'm saying, of course, we take out the highs right there, but let's say we take it from the horizontal. Okay, we break at the horizontal. Let's go and see where that takes Radix up to. That would take us all the way up to 23 cents.
So around 24 cents.
Right. Okay. Of course, we're going to see some additional regions of, well, resistance overhead. It's not necessary that these pattern plays play out in one straight line. We're likely going to see a stutter stop on the highs, possibly coming in at around 18 cents for a stop, even a potential stop at around 16 cents. But yeah, I think the critical level, honestly, for this to have any more upside, 15 cents is going to be your trigger.
Yep. I agree.
15 cents is going to be that trigger. You pull the trigger, and that's a nice, beautiful bullseye. Okay, so yeah, that is the major target. Sean, anything else?
No,
to add
I think
to
you
this?
nailed it. 23.6 cents would be my targets as well. I don't think that 18.4 cents is going to be as important as the 15-cent region.
Yeah. So this is honestly all we have for you for Radix. Let us know what your thoughts are in the comment section below, and do not forget to tell us which altcoin you'd like us to cover in tomorrow's video. The popular vote, of course, wins. Now with this, guys, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao.
Ciao, guys.